Okay, so this is going to be an exciting panel. We had a great chat to start 2 days ago, and I know that Andrew has to run, so we got to jump into this, and Andrew's going to leave, but don't think that's a reflection on the content here. I'm not going to introduce, guys. We'll backtrack and introduce because I know the time is slim. I'm a gray-haired, internet veteran, right? I'm a startup guy. I ran 5 startups in the internet through the evolution from the early 90s. Then I got into mobile, same thing. The continual issue that you face with as a startup is scaling. How do you scale this, right? And we talked a little bit about coming into this. What are the limitations of the blockchain? Right, and you guys were kind enough to send me some feedback, Andrew said one of the biggest issues of scale, the biggest limiting factors of the blockchain is scalability. Toufi said the same thing. Nasser was a little different. You said scale. Yeah. Right, but 50% right. So on that, look, we have the foundations that were put into place. Satoshi, he, she, they came up with a double spend solution. We had the smart contracts with Nextgen coming in, and on those foundational pillars, we built the blockchain. What is it now that we need to drive scale? And Andrew, specifically, I know that capital formation is a big piece to your business. Talk to me a bit about capital formation and how that scales on these foundational pillars.
Yeah. So thanks a lot, Gary. So we started Clearbanc with the idea of helping entrepreneurs get access to capital in a more efficient way. Most businesses are probably not great fits for venture capital and equity investments. They can't get access to bank loans. Increasingly, concepts and projects are able to tokenize and do ICOs or token generation events, but those aren't going to make sense for a lot of small businesses and entrepreneurs. And so Clearbanc has created a different type of product for these small businesses, born on the internet, growing up on the internet. They find their customers online. They process payments online. When I think about the blockchain, the exciting part is this concept of a massive, truly decentral, fully liquid, fully transparent ecosystem that works really well for things like securities and being able to get access to that global marketplace. So
Andrew, talk to me specific about your business. So what's the use case that you have, and how are you sitting on top of this architecture to scale? So I understand you service SMEs, you service verticals like the vacation rental vertical. How are you tangibly scaling your business on top of the blockchain?
Yeah, so the idea is, what I spend my time doing, part of my job is capital markets. So we go and borrow money from banks and credit funds to be able to repackage that and deliver it to customers in a more efficient way, in a way that those large pools of capital couldn't access. And that's been the way that, alternative lenders and financing companies and venture capital firms have done it for a long time. What's exciting for us is we can turn what was an inefficient market into something by removing all of those layers of sort of money managers, can actually create a true sort of peer-to-peer, decentralized, bond marketplace, right? And the idea is, could we actually help all of our customers issue a bond on the blockchain, have that be real-time priced, accurately, fully liquid, and fully transparent. And so that's sort of the vision of where we think Clearbanc is going. And as we talk about sort of scale and infrastructure, my belief is we've got all these fantastic, consumer applications. Uber on the blockchain, Airbnb on the blockchain, these massive consumer applications, media companies. The challenge we've seen is, even with a media company like CryptoKitties, right? You see that's taken up, 20, 30% of the entire Ethereum computing power in its peak. And so how could we have, for the number of projects that have launched on that platform, if any of them get to true scale of the vision, it's gonna basically grind things to a halt or require so much energy consumption.
Right.
And so I think if we move to the securities world and the capital markets world, that's going to create enough incentive and enough sort of excess value to invest in that infrastructure to truly scale, and then we'll see those massive consumer applications come.
Andrew, before you leave us, and then we're going to deep dive, guys. Before you leave us, answer me.
Don't leave us.
No, I know. He's got a meeting. He's got to run. He's got to go and make money.
But, by the way, did you guys notice that we're dressed exactly like the pictures?
Oh yeah.
How cool is that?
That's great.
Just so you recognize it.
Oh, shit, that is cool. That is cool. But you're in the wrong position.
Good notice.
That's cool.
I haven't noticed that.
So obviously the rest of this conversation is going to be very deep. But Andrew, before we leave, I'm going to ask you one question. I'm going to ask you guys afterwards. One is, what keeps you up at night? And the other thing is, what do you think of first thing in the morning? And I ask this question because it's a startup. It's a good startup question to ask, because what keeps you up at night are the things that are going to limit your business, are going to be the impediments to your business. What you think about first thing in the morning is the most important thing for your business to advance it, to accelerate it. Answer me these two things, and then you can go off and make money.
Okay. Yeah. Look, I think like all of us in the space, I think there's a lot of opportunity and a lot of ambiguity around things like regulation, right? So basically figuring out, creating a framework where we can go and run hard and not constantly start to look over our shoulders around, are we doing things in the right way? And so that's something that I think coming together as a group and figuring out how do we create value in the marketplace? How do we take advantage of this opportunity? I think Canada, Toronto, Vancouver, Montreal, we're really well positioned from a talent and understanding perspective to take advantage of this massive change. It's bigger than the internet, but we've got to set it up right. And then I think what I think about in the morning is, we're on the precipice of this massive thing, and why are we not moving faster, right? I mean, it's literally like, what can I do to grow my company 10x today, right? And what are the limitations to that? And so I think, I wake up excited every morning, which is great.
And the killer app, before you go, the thing that you said was the killer app was, again, to underscore securities and capital markets.
Yeah, exactly.
Okay, fly and be free.
Pardon?
Fly and be free. When do you have to go?
Where do I have to
when do you have to go? What time do you have to leave?
He's kicking you out.
He's good.
He's kicking you out.
I'm out.
I can defend
fantastic.
you.
Okay, thanks a lot, Andrew, man.
I'll be back later today, guys.
Okay, yeah. So now it's like musical chairs here. Okay, so now we're going to take a deeper dive. Okay, so
now the fun starts.
Sure. I just wanted to know, why didn't you want him?
Why did what?
Why do you want him to leave?
No, he has a meeting.
I'm just kidding. Okay, cool.
Yeah.
So what keeps me up at night is often not the same thing that I wake up to, because I spend a lot of nights without any sleep. So when you don't sleep, you don't wake up. You kind of spend the whole night through. And it's often when you look at the existing evolution of the blockchain and what most people are talking about, it's gone sideways. How many of you are miners in the audience? Okay, cool. That's 0.00%. So fantastic. There's a thing that happened on Bitcoin about 5 years and 3 months ago. It's actually 5 years and 4 months ago, which is an exploitation of the Bitcoin protocol, where part of the machine started evolving without the rest of that machine, and that was not anticipated by design initially. And with that, we started noticing that the entire mining, burning, for example, electricity that you hear, Bitcoin burns more electricity than the country of Iceland, and the combined is more on a chart of nations, it's higher than 158 nations. That was not intended to do this much burn without evolving the amount of transactions. So what keeps me up at night is that many folks are looking at the thing as if it's like, hey, let's go and build mining machines, and this year about $30 billion being invested into mining. Meanwhile, the technology at its core is going to eliminate anything that it's called mining. So I feel bad to see folks spending $30 billion that it's going to be wasted. We started thinking of how to reutilize that computing power, But sometimes it's very hard to talk to folks that they feel that they have an existential threat, yet they're supposed to be siding with the change, siding with the revolution, and that's a very weak positioning to putting the entire industry where you're trying to be a revolution, yet it needs to be revolutionized from within.
So are there obviously some existential threats, right? Certain things are going to drop off, certain things are going to advance. Nasser, when you look at somebody like Warren Buffett turning around and saying, hey, it's like Cinderella, everybody's going to turn to a pumpkin at 12 o'clock sharp. The problem is there are no hands on the clock. Nobody knows when it's 12 o'clock, right? It's a very poetic thing of Mr. Buffett to say. But what do you see as the existential threats? Do you see problems that you navigate in your business to scale to, like?
Well, let me start by seeing, like, okay, so before seeing the threat, let's talk about the opportunity. The opportunity is, we have, the technology has been proven that, it is viable for executing money contracts. Basically, we found a way that we can actually move money easy, very secure, and we solve the problem of executing very simple contract that is money exchange, right? Or, you could do value exchange. I think there was a hype. People got excited. We got, the Bitcoin going up and up last year. And also we start thinking about the blockchain as the next generation of smart contract executions. And this is where the real business value would come to real industries and people. And so the opportunity is there, that's very, very interesting. What keeps me up at night, or what worries me, is that we cannot, we're not really fast enough coming up with technologies and scale for the network to realize the business values that the technology has been talked about over and over. And then if we're slow to delivering values to the real businesses, then this whole belief in the technology will probably die down. That's probably what I'm afraid of. Like, we have to start coming up with the real solutions that really, are adopted by large businesses.
Look, blockchain is so nascent. I mean, I remember at the internet, it was government with ARPANET, and then pornography that advanced it, and then maybe a bit of e-commerce on the tail. It took a long time to get things going. Things have moved so fast because there's money at the core of this value proposition out of the gate, right? So we are moving fast. Maybe it is that we're moving too fast? The problem is that we just don't have the capacity building, to the maturity of the market, and it's accelerated beyond the scope of what we can deliver.
Well, I think there's two things. First of all, there's the notion of blockchain and association with Bitcoin. It started as Bitcoin, but then there's a lot of talk about actually bringing this to the real businesses, like smart contracts. I haven't seen really, like, besides the CryptoKitties use case, I haven't seen any really viable product getting out there and executing smart contracts.
I'm not sure I would call that viable. It kind of crashed after like a few hours.
Yeah, exactly. 15% of Ethereum was consumed.
It's kind of like you multiply useless by useless, and you get like useless squared.
Exactly. Yeah.
Yeah.
Well, this is exactly it. We've like Ethereum went up in price. From like $50 to $1,000, and the whole idea or the whole premise of Ethereum was, we're here to execute smart contracts, and then here we are just exchanging or doing speculation on the currency. So for me, coming up, wanted to do use of, real applications on Ethereum blockchain. That was really something that was very, cost prohibitive now for me running transactions on Ethereum blockchain, because the transaction fees are so high, because the price has gone from 50 as, like gas price on the network to 1,000. I mean, this is like, multiplied the cost for doing transactions that much, right? So I think we have to stabilize the networks from a speculation, or just being, just do speculation on the currencies that run the networks, towards more, okay, now let's run efficient networks that we know they're very stable, very easy to articulate the costs, and it's very...
Actually, you kind of mentioned the fees and the cost interchangeably, but I think on the Ethereum network specifically, the cost is about 100x of what the fees are today, a little bit more than 100. But it's not really noticed by the users because that printing of Ether, which is supposedly should be distributed between all the users, is just being provided to the group that it's called miners. So from that perspective, it's extracting wealth from the crowd into a different set of
yeah, it's getting more centralized in the miners now. It's like more, you know.
Let's just maybe step back a bit. You know, when you hear Naval Ravikant talk about this, he talks about the fact that, look, it's like an invisible hand. This is a pure marketplace. It will stabilize because what he believes is that ultimately the will of the market will stabilize it. For example, if you want to get to a full node on Ethereum, you now, to get a dedicated connection to a full node, people are charging. So the marketplace is actually stabilizing itself, you know, to create scale, to create, you know, services that are sustainable for.
Well, let me give you an example. The internet scaled because you've got a lot of networks interconnected to each other, right? And you know, you cannot have a single Ethereum network that is running globally and scaling. So and the only way that, you know, we're going to have that is if we start getting real actual businesses investing in actual networks that can interconnect to each other.
Let me ask, we're running out of time rapidly here. Max Planck once said, you know, science advances one funeral at a time, right? Do we need to sort of kill the incumbents to advance things? You're building solutions which reinvent legacy solutions on the blockchain. Yeah. Do we have to kill the incumbents in order to move this ahead?
I mean, not really. It's just if you look at TCP/IP, it's what enables the internet today. And replacing TCP/IP or evolving it, it's for everyone to use. So those that they see it as an opportunity, they jump on it, and it turns out to be a fabulous opportunity for them. But those that they don't see it, they might miss the boat, and sure, they might face existential threat, but I guess life is tough. I
mean, there's going to be costs too. So there's going to be costs to you know, if the technology, the new technology is going to be more efficient and better, then eventually people will jump onto it. Now there's costs to migrate and whatnot, but I don't think there's going to be elimination of. So for now, for example, there's the protocol called IPFS on Ethereum to do more of a replacement to the TCP/IP for addressing, or the HTTP protocol. You know, which is fantastic. So if these guys
not necessarily fantastic, it's more like a layer 2 to fix a layer 0 problem, which is
well, it's
problematic.
Better. Let's put it this way, better than the HTTP protocol that we have today, where everything is going to link to fixed,
yeah, I mean,
it's
more like a patch, a security patch on top of something that doesn't necessarily work. It's better than not necessarily work, exactly. But we need to solve the problem from the ground.
Which is a great way to end, because this is essentially where we are with the blockchain, right? Is that we're trying to work out, you know, what components will help us scale, what components are you know, are existential threats, whether we have to kill the consensus, building consensus through mining operations. How do we make sure that we can meet the needs of solutioning?
I just want to say one thing at the very end. I mean, from the blockchain perspective, I hope a lot of us, we see that we owe it a big time to Bitcoin, and we feel that if we were to find a model where we turn every Satoshi to be equivalent to $1, and yet economical, and it works for the globe, then every single Bitcoin can be $100 million. Today, it cannot work with any mining or any layer 1 that you can position any way possible. So I'm hoping that we can get there, because the mission initially, if you look at it, is to lower transaction costs, not fees. Fees can hide the cost.
Got it.
And that can be better for humanity. You reduce the cost, you reduce friction, you get better performance.
$1 Satoshi, $1. Thank you very much.